There we go. Happy Friday, everyone. Welcome to the Wall Street Blockchain Alliance's Crypto Roundup. Lovely autumn day here, David. Friday, October 17th, 2025. Ron Quaranta here with my amazing colleague and co-host, the one, the only, David Brill. Apologies to everyone for the slight technical kerfuffle, but I think we are live. Thank you all for joining us on LinkedIn Live and X and YouTube. If you've got questions for David or I, please post them in the chat. We're happy to address them. And David, before we begin our usual disclaimers, please keep in mind that nothing we're discussing is investment or legal advice. And then obviously, David and I are really speaking about our own personal opinions and not necessarily the opinions of our firms. David, another busy week. I think Josh's jet is landing somewhere. I'm not sure where, so hopefully she can join us a bit later on. David, I wanted to start with something, and you and I were talking about this in the virtual green room. I woke up this morning in a slight panic at 5 a.m.-ish. I don't know why. So like a foolish young man, I logged into my terminals and saw that we were off big across most markets. The VIX at 5:30 this morning, David, was 26. It's down a little bit. Things seem to have calmed down, but there seems to be a little bit of fear spreading, David, in the markets. And I think you and I see some of what that's implying, but I think some of it's overblown. What are your thoughts?
Look, we had these two private credit issues that have sort of blown up. One was for $2 billion. I don't recall what the other one was for. But I think a certain segment of the market is now sort of looking at their private credit or looking at their debt and just sort of revisiting the diligence around it, understanding who the companies are, and just, rebalancing what their exposure is. And I guess you could see that more in like the commercial banks that got hit more.
Yeah.
Look, I think these things are prudent. There's always overreactions. And look, 2 million of private credit, suddenly disappears in a bankruptcy filing. That's a problem. Yeah. I mean, that's clearly a problem. And so I think it's a normal reaction to it, but it's sort of a market overreaction to it in my mind.
David, I agree with you, and I'm struggling with, the word that gets thrown out in the media a lot, and I won't say which sources. You and I look at a lot of different things, is really that word contagion, and I don't really buy into that. I mean, I think, look, there's a leverage conversation. You and I were just talking about there are some positions out there in the world where you could do 100x on a particular asset.
Yeah.
But I also think it is situation specific. I had a couple of colleagues in the banking space I spoke with this morning, and it was, commercial banks, regional commercial banks are having issues. That portends underlying problems. I'm not sure I'm getting that. I think banks in the US specifically and generally globally are in a better position than they were. You and I remember 2008 very well. I think it's a very different situation. Do you agree?
Yeah, I totally agree. I think that our banks are much better capitalized now than they were before. So yeah, I totally agree. But we all know that the market doesn't like uncertainty.
Yeah.
Clearly, nobody was predicting this, or if somebody was, it was in a corner of the world that didn't sort of make it to the surface. Maybe somebody was tweeting about it. But look, I think ultimately for our markets, what happened last Friday on what seemed like a fairly normal day when we had done our podcast, suddenly cascading as such is worth sort of more time, of reflection on our end.
Yeah. And David, you chaired our crypto asset working group meeting this morning. By the way, a trooper doing it from DC. We're going to have to talk about FinTech Week, but it was really a great conversation because a lot of what came up was, let's talk about tariffs again and 100% tariffs, and everyone imputed the reason for market sell-off in crypto to that. David, that sell-off began before that happened. That just in my mind was a catalyst and really reflects crypto is a digital assets are a 24/7 market, which means they can react in real time as these things are happening. And you said something very interesting this week, which was really insightful. How do we, and I'm paraphrasing, how do we protect against that? Or how do we evolve markets such that we don't wake up on a Monday morning and we're off double-digit percentages because of something that happened on Friday afternoon.
And that's going to be hard because until other markets start trading 24/7, we're sort of the I don't want to say we're the catalyst, but we're the first liquid market that trades when these events happen. And this is the first place people look for liquidity when these events happen.
Mm-hmm. David, sorry, go ahead.
I don't love the whole canary in the coal mine.
I know. I was going to say it, and then I thought better of it.
But it is a good analogy, and it is on some levels true.
Yeah.
That we are that. But ultimately, it's the beauty of our markets. But I do think that there's a lot of trading in Asia, maybe some in Europe, that is, heavily leveraged, probably not as mature as it is in the US or Europe. And it does move the markets. And I think, what happened last Friday is, there's a lot of different versions of it, but ultimately a lot of people with a lot of multiples of leverage got blown out of their positions, mainly with altcoins being the collateral for it.
Yeah.
And although there's different views, the one that seems to be prevailing is that the oracles failed on one of the exchanges, mispriced a lot of the altcoins, and therefore mispriced the collateral that was backing people's leverage positions.
Yeah, David, thanks. Shout out to WSBA member Adam Goldberg at Figure. I think it's up to 150% now. I can't even keep up with the percentages, Adam. We've got to get Adam on the show. He's got really interesting insights on this, David.
Absolutely.
David, I wanted to bring that up as well. You mentioned the oracles, and I'd like to spend a second, if you could, for some of the audience who may not see the impact of that. And there was really the rumor mill of some of these things happened at a particular exchange. I call it the rumor mill because it's still under kind of research. How risky are the oracles that drive some of these things, and are they ready for broader retail engagement?
I think they're being tested. I mean, I think there are several that are good. I do think that exchanges should have multiple oracles that they can leverage and use. I worked at an exchange, and yes, if you have a data feed that's mispricing, it's problematic, especially if you're offering leverage and other derivative products based on the prices that the oracle is providing. So I think there's a better job that can be done. There are rumors that there were sort of attacks on these oracles, and that might have been the problem. Yeah. So there is a need, with the amount of value there, to be really surveilling this in real time. And really, look, regular markets have circuit breakers, and I'm not necessarily advocating for a circuit breaker in crypto. It sort of goes against the ethos. Mm-hmm. But, there does need to be a way to deal with these oracle issues and mispricing, that people don't get, taken out of their leverage positions because their collateral, and again, when I'm talking about collateral, by the way, I'm not talking about USDC and USDT.
Yep.
I don't think those are prone to those type of issues. I mean, we had the Silvergate issue once, but that was a very unique issue.
Yeah.
But when you have other altcoins as collateral for your leverage, and you're in one of these situations, they could get devalued significantly and then cause your, collateral to dry up.
Yep. And David, to build on that as well, one of the things I've found that's interesting for the TradFi folks that you and I know that are now really beginning to understand crypto is, and again, we talked about this at your working group meeting, liquidations are automatic in many of these contexts. In the TradFi world, in the aggregate in general, they're not. So again, the mechanics of how it operates in those markets live and breathe is a very, very different thing. You mentioned something earlier, and young guys like Adam Goldberg might do 150% leverage trades, David. But
Adam.
Not Adam. He's a smarter man than that. But David, you and I remember a world on Wall Street pre-circuit breaker. And I remember when those conversations were happening and Wall Street veterans were screaming bloody murder because many of them didn't want circuit breakers. It went against open market, the free market. Is that still going to be against the ethos as more and more retail gets involved, as more and more 401ks get involved, as more and more pension funds get involved in crypto?
I do still think that it's the case because, look, people who own the ETFs in their retirement or in their brokerage accounts aren't really ultimately affected. Now, yes, they may trade widely in a day, but nobody's getting blown out of their positions.
Right.
If you own IBIT and you just own it, spot IBIT in your brokerage account,
Yeah.
Whatever the price is at 4 o'clock, it reprices, trades maybe slightly after hours, and that's that. So I think it's really the people who are trading on leverage and really the most extreme sort of end of the curve that are getting impacted.
So that brings me to something else we spoke about, and it's a very hard conversation for me, David, because you and I think agree that people who are willing to accept the risk should be able to trade what they want to trade.
Yeah.
But I do have a level of concern around, FOMO, get rich quick mentalities approaching some of the markets. Am I overblowing that fear?
You're not overblowing that fear, but what I think people really need to be more prudent about is if you're taking on all this leverage and you think that the altcoin that you're using as collateral is going to support that position and it's sort of a very heavy volume environment where it's moving directionally, negatively, I think you really need to reassess. I think for me, it's most important that everybody has choices and they have these choices, and you have to own your choices. That being said, I do not like seeing people losing, 7-figure amounts because the collateral was mispriced or things of that nature. Like that I don't think serves anybody's purpose, and it's not something I want to see. So it's a fine line, Ron, but I think people who are taking extreme amount of leverage really need to think about what collateral they're using and how they can react in a tense, sell-driven environment.
Yeah, and this is part of the education curve we've been talking about for a long, long time. Just know what you're getting into. Warren Buffett said it for the traditional equities markets and financial markets for a long, long time. There's a lot of esoteric stuff out there, David. Much of it promises returns that may not be realistic. So it really always is about be careful what you're doing, and don't wager what you. I don't want to say the word wager because that's a very loaded word, but don't put into it what you're not willing to lose is part of my argument right now. David, it's interesting. We've got our event coming up next week, and we'll talk about that a bit later. Adam's going to be there. You're going to be there. Josh's going to be there. So many of our member firms are going to be there. Really looking forward to it. But the Bentley drove you, the chauffeured Bentley took you to DC, I believe, this week for DC Fintech Week. I couldn't be there, but a lot of our colleagues were. What was the tone and tempo of the conversations at Fintech Week?
I think the tone and tempo were great. I really saw an energized group of folks, both in TradFi and in crypto. The first day was, majority TradFi, and I got to hear Governor Waller speak and the SEC chair, Atkins spoke. There were some really interesting panels. A friend of mine, Sarah Weed, ran a panel on payments, which I thought was really good. So there's really a lot of interesting information and people from, fintechs, TradFi, and crypto. The second day was really crypto focus. And, I listened in a panel that Greg X was on and another panel that Lee Schneider, an old friend, was on from Avalab. So it was really a nice mix. And, it's great to hear from, Chair Atkins in person and just sort of hear his perspectives and other people's views on stable coins. And there's a very bullish environment. I don't think there's a lot of price being talked about except for the mechanics in DeFi in one of the panels I listened to. And more along the lines that DeFi was working properly during this, this sales runoff, or I don't want to call it a flash crash, but we'll say this flash downward pressure that occurred.
Have you noticed that everyone uses the hyperbole really quickly? It's flash crash, it's the apocalypse, it's really terrible stuff. Shout out to WSBA member Greg Murphy. Due diligence, back to our previous point, I should have seen this earlier, David. Due diligence on a lending and DeFi platform will now include an Oracle analysis. Really good point, where it may not have previously. Creating circuit breakers would be difficult, if not impossible. Fully agree, particularly from a DeFi focus, David. Back to DC Fintech Week, or at least the broader conversation. I am continually impressed. Chair Atkins is a super smart person. There's a really great group of people at the SEC and the other regulators. Just the openness to having the conversation with industry participants. Can you speak a little bit to what Chair Atkins had noted? Because he's been in the news, even in the midst of the shutdown, talking about some of what they're looking at from a roadmap perspective for the SEC.
Yeah, they were talking about how crypto is a priority. They were talking about really creating a project management function within the SEC to really drive some of these bigger agenda items home. And also more interagency collaboration so that, parties aren't sort of dealing with one agency, then having to deal with another in a duplicative way, and finding a way to have interagency sort of interoperability to the extent that it's appropriate. So I think that Chair Atkins is very much aligned with the administration on wanting to move this forward, but in a thoughtful way. I sent you an article about enforcement issues and how they talked about they want to, and I think this is really not X fraud, but X the fraud. That they want to give people an opportunity to come in and speak or to have a dialogue before an enforcement action is brought.
Yeah.
And I think when it's not a fraud, if it's a classification issue or something else, I think having a dialogue is important. Yeah. And look, some companies will take advantage of that and some won't. But I think it's a marked difference between this administration and this SEC chair than our previous one.
Yeah, and look, we've seen many instances where legitimate, hardworking teams have gone to the SEC prior, for example. And this is not about bashing prior administrations, but it was come in, tell us what you're doing, and you find out you've got an enforcement action almost as soon as you walk out the door. So it really is a different philosophy perspective. Adam will scream at me for this, David, but I'm assuming there was no conversations about merging agencies like the SEC and the CFTC.
No, but they really did talk more about collaboration, which I thought was important. Yeah. Somebody made a good point, and you and I have said it, but somebody said in a little bit of different context. You and I have said before that we're probably 4 to 8 years behind where we should be in regulation because of, the prior administration's view on crypto and blockchain and regulation. And so they were calling it regulatory debt. And tech debt is, you're building out so many different products and, you really have this tech debt to build out the back end of a lot of things. We have a lot of this regulatory debt that we have to work through. And it seems that Chair Atkins really is focused on that. And I certainly appreciated that. And I think the audience did as well.
Yep. Shout out to WSBA member Emma Channing, the one, the only. There was a lot of volume last weekend. That is.
Oh, boy. There was.
I didn't open the link. David, there was also on that market point, there's also a regional aspect to it, right? Again, because of this 24/7, you check out the options a lot. You see where some of the flows are going. A lot of it originates out of Asia. Is that, in your opinion, correct?
There's a lot that originates out of Asia. And look, our options market, to the extent that they're not perps and that you're just trading on our exchanges, 4:00 on Friday, no more trading until Monday, at 9:30. Yeah. So, there is a lot of that movement at that time, but it just seems like in this last instance, again, I'm not going to discuss which exchange in particular, but that one exchange had, a fairly large sell-off and then problems with its oracles, and it caused this mispricing, which caused this cascading. Yeah. And I will say that I was in all-day meetings on Friday, and I had the great pleasure of leaving those meetings and going to meet my daughter for dinner down in Coral Gables. And while I'm in the Uber from Brickell to Coral Gables, I'm literally, my text messages are blowing up. My phone is vibrating in my hand, and it's literally ding, 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 ding. And I'm getting alerts, and people are like, what's going on? And then people ask you, is this a good time to buy, a few Bitcoin and ETH and a couple other tokens? I'm like, what is going on? Yeah. Because I was going to decompress from a long day, as I was going to meet my daughter. And so then I looked in, and all of a sudden, Bitcoin was down to 106 or something, and I was just like,
For the audience, David, just so they're aware, a good 40 to 50% of those messages are probably from me during any given day.
Ron, I have to tell you, there were people all over, and some people who I, email with, and others who you don't always speak to too often. Like one person was said, "Oh, I know you've been telling me about this since it was at like 6,000, but this looks like a good opportunity, to get in," and it was just really funny, but it was unexpected, and I think also, again, one thing we really have to point out is that the people who are not native to crypto, who are owning this in the ETFs and their retirement accounts or in their brokerage accounts, they don't feel this. They may see that IBIT was down 4% and ETHA was down 4% or whatever ETF you use, was down, but they're not really feeling the cascading of the altcoins or really tracking that. So I don't think that the broader market feels or understands this and views it as a detriment than to our crypto native folks.
David, absolutely. I got to go back to Emma. She's got her usual series of amazing chats. I have a suspicion that some of the weekend activity and new related issues is a particular country related. I agree, David. I think we know of what she's speaking, but we'll leave that for off-camera discussions. And this is a good piece on liquidations. I didn't click the link. I did see the previous article from CoinDesk, which is always doing an amazing job. David, it brings me to liquidations, which I think is an important part of the conversation as well. And I'm going to say something. I want to hear you tell me if I'm right or wrong, but there is something to be said about liquidations flushing out leveraged positions that probably were not tenable. And that's arguably overall a good thing for the market in the end.
I'll tell you a stat that I think is even more important than that. I think traders in profit is a statistic that I think is important, because if so many people are in profit, look, we want people to make money. We want the ecosystem to grow. We want people to make money.
Of course.
But if like 97, 98% of the traders are in profit, at some point there's going to be a recalibration. So I think, that is something, the amount of liquidations is extreme. And I do think that getting some of the fast money out of the system is a positive, but it can be done in a more orderly way, and that's sort of the way I think about it.
I agree with you on the orderly, but my response to that is there's no structure to do it orderly right now in crypto markets. No easy structure to do it that way. I think did we lose you?
Case. No, I think we're just glitching a little bit here. I'm going to try and do something here. But remember, I think the issue is this. If you're collateralized, but you can't access or add more collateral because the exchange is down or the oracles aren't working.
Yeah, fair.
Look, I saw a lot of people like pretty upset on X and talking about how they got wiped out. And, look, there's a whole bunch of hyperbole on that too. And it's not always clear who's telling the truth or not, or who's exaggerating. But ultimately, if I was super leveraged and I couldn't get more collateral in because the exchange was down or there was an issue with one of the protocols. Now, I'm not saying there was an issue with the protocols, but the exchange was down or it was mispricing of collateral. Like, that's a big frustration, and so there's a mix of it. So yes, should some leveraging come out of the market be a good thing? Yes, it's a good thing. Is it better that it's done in a more orderly way and people aren't having these kind of issues? That would be the preferable way if people do have to get liquidated.
I agree with you. Look, in any sense, in any market, $500 billion in dropped market cap is a big deal. David, I wanted to go back to something before I made us digress on market cap and prices and liquidations. When we talked about the regulators and talked about the SEC and CFTC, it strikes you and I think we've had this conversation at our legal working group and other working groups, that regulators in the United States are trying to do their best to at least create the framework of a structure for markets within the remit that they've got, right? That doesn't mean they can create legislation, which means we still need market structure.
Yes.
And the government shutdown has put a lot of this stuff on pause. It's put ETFs out of the SEC on pause. And we saw recently, I think it was the leaked information about a draft, and you and I are going to avoid the politics of it per se.
Mm.
But there are a couple of things happening. One is we're not getting closer to the market structure legislation that we need. I did see some bright rays about this. There are some Democratic senators, I think, meeting with crypto leaders. I guess the question, David, is how critical is market structure legislation, and what happens if we don't end the year with that legislation?
So I think it's very critical. My observations are when I read that Democratic proposal that was floated out, I had two responses. One is, was this kind of like a leverage play where they know this is a big priority for Republicans, so we're going to put something out that's really untenable and kind of force, negotiations towards the middle.
Yeah.
And the second one was, do I think that whomever leaked this or some subset of the Dems, do they fully understand the mechanism of DeFi?
Right.
And so I think that on the DeFi piece, we as an industry need to do a better job educating this cohort of Democratic senators on how DeFi works and why it's not as problematic as they may perceive it to be.
Yeah.
And that it is not a huge funnel to, terrorist financing.
Right.
So I think that that's really important. And I think that people have been well-intentioned, but I'm not sure if the educating has gone far enough and if we don't need more of it.
And David, I'll throw out one thing here, that it is also an international conversation. And the reason I bring that, like Emma, I had the privilege of being in the UK about 3 weeks ago, and Emma and I were at the GLG event. This came up pretty consistently. Like there are regulators in the UK, there are regulators in the EU that may not understand some things like DeFi. So that education push from the industry needs to be a global initiative.
Yeah, and look, I think in the US, and you and I had talked about this for years, and the WSBA has and others, the lobbying efforts really paid off in this election. I think that if nothing else, that people need to get re-engaged and lobbying again for, their Democratic senators to, have an open mind and a willingness to meet halfway or meet some part of the way to get this legislation passed. And I'm not picking on Democrats. I'm just saying that, the Republicans are sponsoring this, so we need some meeting of the middle. So I think those, representatives, or particularly those senators who worked with Fair Shake and other PACs, I think, really need to refocus that effort. And I think also we just need to be mindful that, right now, people who work in these, the SEC or other agencies, they can't play around with the technology.
Right.
And I think that really needs to change.
Yeah.
And again, I'm not encouraging people to be day trading and things like that. But, I've often said, and, I've said this to people who've worked in the commission, allow people to have like a de minimis, like $50 or some real equivalent, or even be given test tokens that aren't worth anything just so that they could play around and understand it. I mean, I think I can tell you personally that I've learned the most by, putting my hat on and thinking of myself as a consumer and going through different protocols and moving assets and things like that and seeing where are the friction points. What don't I understand? Or what would a person who doesn't have a tech background understand?
Yeah, which David has gotten you and I, and we've talked about this for a long time, to be able to say the UX needs to improve, or here are the things that need to improve, or here's how retail would engage. I don't envy the job of regulators trying to regulate things they really can't examine as deeply as some of them might want to. David, we've got short time. We've got a lot going on this coming week. I wanted to talk to you a little bit about our upcoming event, if I could. You and I will be on panel number 2, which will be talking about markets. Tell me a little bit about what you plan on discussing. And I know there's a lot of time between now and next Thursday, but would love your perspectives. It's a great audience of thought leaders, and we've got so many sponsors that are members. Would love to see what you're looking forward to.
Well, first of all, I really enjoy having a conversation with you and Kayvon Sadeghi. He's at Jenner and Block, so I'm certainly going to enjoy that. I think I'm just going to tease that I may, have some controversial comments to say and more provocative things to sort of push the conversation forward. But look, I do think that our markets are growing,
Yep.
and they are growing in a way that's supportive of the industry. I just do think that we have some speed bumps we need to work through.
Yep.
And I think, part of the dialogue will be like some ideas on how to work through these speed bumps.
Yep. And now the audience knows why these events are Chatham House rule, David.
Yes. Well, look, I think when you have a lot of people who are involved in the industry and, a lot of experts in the industry, I think there's a baseline of knowledge that everyone has. So I think these events are really good for highlighting, sort of the different views that you have and sort of the insights that you've gleaned from going to all these events and meeting other people, who are like-minded. So I think that's the benefit of it. It's really like, you take a survey class in college. This is the dissertation level conversation.
Yep. David, I'm going to be spending time working with the team to button up the last work associated with doing the event. It's funny because you mentioned the people that are speaking. So many of them are colleagues and friends. I saw the final draft of the bio handout that being given out at the event. And good God, everyone's got such deep expertise. It really is amazing. And it's such a privilege, David, to be part of that with all of you. So everyone in the audience, thank you so much for joining us. If you haven't registered and you're not a WSBA member, there's a link on the website. Please join us. You'll get to meet David. You get to meet Adam. You get to meet Greg. You'll get to meet Josh, a whole bunch of other folks. And David, I'm also going to start working on my next business idea. Are you ready for this?
I'm ready.
Josh will probably kill me for this, but it's, how there are X channels that track where Elon Musk is, the import of that. I'm going to create one for Josh Clayman. I'm just going to track the jet wherever she is globally and let the world know how important her travels are. No, Josh, I'm kidding. Please don't kill me at the event. But David, let's leave it there. We've got a busy day coming up, a busy weekend. It's a work weekend for so many of us. Emma, Adam, Greg, thank you so much for watching. If we didn't get to any question you wanted to cover, drop us a note, info@wsba.co. David and I will do our best to answer, and I'm looking forward to seeing you all next week. David, next week's episode will be event recap only because I'm not going to have the energy to put together an agenda for us.
Yeah, that sounds great. I'm really thrilled. I'll be flying up. Actually, I'm going to Philadelphia on Sunday for the Association of Corporate Counsel annual meeting.
Nice.
Then I'll be heading over to New York for our event. And then actually I'm going to a charity event the next night for a cause called Orphan Starfish, which is very close to me. And one of my very good friends runs that event. So it's going to be an eventful week, and I'm looking forward to it.
Looking forward to seeing you, old friend. It's been too long. Thank you, everyone. We'll leave it there. Have a great weekend. Bye-bye.
Take care.